Hello and welcome to today's web chat where we have Moritz Strobel from the Deutsche Bank, the Global Head of Open Banking and APIs in Deutsche, and his colleague Jose, who has been at the bank since, 2003, who's Global Head of Accounts and Platform and Services in Deutsche. Now, what we're going to be talking about is how APIs, the funny things that make everything happen, how APIs make real-time processes and liquidity management possible. Welcome, Jose.
Thank you, Jack.
Okay, and welcome, Moritz.
Hi, Jack. Thank you.
Okay, good to talk to you. Now, Moritz, what are we talking about here? Because this is a huge topic. What are you focusing on?
Well, today we want to share Deutsche Bank's insight into the market, into open banking, into real-time trends that are behind APIs. And by the way, APIs means application programming interface. And it's the technical system interface that is securely available over the internet to access real-time services with immediate feedback. So that's what we want to talk about today. And the benefits that are arising for our corporate clients. We want to highlight the benefits on the treasury side, on the liquidity processes, and then show how Deutsche Bank is, with our offering, approaching that challenge and to go on to that journey with our customers.
But why are you doing it now? I mean, they've been around for a long time.
Yeah, APIs is actually not a new technology. It's been around since the 80s from the technical perspective. But there are multiple things that are happening now in the market that really drive the process of open banking, real-time, and APIs. First one is the technology itself is becoming mature. It's becoming performant. It's becoming secure over the internet, available. And the API channel as a real-time channel is really establishing in parallel to the other channels that we are used to be working with. Second one is formats and standards, right? There are so many different formats going on which are bank specific and where corporates connect to our environments. But now as global message formats are being established, like ISO 20022 and XML, that is driving standardization and is really driving forward the process of adoption and the benefits behind those cases. And last point, the ERP and TMS providers, treasury management system providers, are starting to closely look into those processes as well. So integrate with the banks from their standard offering in their software. So this is the third acceleration that's taken place in the market, which makes this moment so special that we think it's the right time to really accelerate APIs, real-time process adoption across the processes that and the products that we are offering.
Now, clearly this is going to require new infrastructure. Can you talk us through this explanation of why and how the areas where the processes will change?
Yeah, obviously infrastructure is an important topic here. It's not only from the technical perspective, but across the different areas of what a bank is servicing to the corporate clients, right? And on this slide, you see the major trends that we see arising from real-time and API in the market. It's coming from collections and payments to real-time FX to KYC and customer self-service. Last but not least, for liquidity. So what you see here is really a broad variety of trends, where a few are obviously more important than others.
And what's the most important one here, that where the focus is?
So we see two areas. First one is where are the real, like the critical benefits, right? The benefits that you can draw from real time. First one is you can really reduce friction in liquidity management processes, where you use instant payments with real-time confirmation to have payment execution confirmation immediately. You can run automated account structure setup and maintenance even for virtual accounts, which become more important. You can do instant reconciliation on your bookings and on the accounts that you're running with, even on complex structures, and that all fully automated, which will in the end lead to enhanced forecasting, which is one of the most important topics in liquidity management, obviously. Then there are other areas, that's the second class, which is critical from a reaction point of view. How would you handle in the future incoming credits of instant payments on your accounts? So what you would want to have is real-time credit notifications on physical or virtual accounts. You would have real-time FX and deposit rates to manage your cash pooling and your deposits with your corporate partners. So that's the critical, the most important areas. But this slide shows that across those different areas, there's so many benefits that you can look into. It's more about where you start from, okay, as a corporate. There are certainly some of these benefits that are agnostic for all sorts of business, right? Like instant payments and real-time credit notifications. But others are very individual, and they can solve individual problems while you are pairing and bundling these different features of the API real-time channel together to solve your specific problem. And there are even ones that you can use to create own new services in your business, which are relevant for your competitive position.
Okay, so then the next question obviously is, how are you approaching this journey to real-time treasury?
Well, we as Deutsche Bank are running a multi-level strategy. And actually, as I said before, it's primarily about real-time, right? API is just the buzzword around it. And for our corporate clients, and this is what you see in this slide over here, we have a three-level approach, which is not obvious right away, but I will explain a little bit. Firstly, as a global player and a global lender, we as Deutsche run a global unified approach, as standardized as possible, complemented with some DB specifics wherever required by our corporate customers. We provide foundational functionality, which is payment initiation, account information, as the foundational API functionality across the different regions. On top of this, we will provide higher value APIs, for example, account validation to reduce risk or to receive instant confirmation of payments. This is the second level of the strategy. And then as we know that this whole journey is something that needs to be started with the first step, we are helping to integrate the banking activities into the immediate context of the business transactions of our corporate clients and support them even to re-engineer their products with new possibilities around real time, right? So what we recommend is that you choose a starting point and from there take forward the journey to implement real-time processes within your environment, because it's not just like connecting to an API, then the real-time is there. It's about changing and adopting the processes to a new real-time world.
And that's essentially it, isn't it? It isn't just the technology. You've got to adapt the whole way of working within Treasury to take advantage of this.
Absolutely correct, Jack. So starting with the technology and the connection doesn't change a lot, right? The real change comes from making the right use of that right technology. And then we'll continue to extend our API offering on the feature side, and we will be driving it more into the direction what's right from the platform that we're coming from, which Chema will talk about in his case study that'll follow now, and will show clearly on how we drive this right from our core systems to the external APIs that we're going to offer.
Okay, so let's have a look at this case study because it's illustrative of so many different things. Jose.
This is, Jack, basically what Moritz was just alluding a minute ago, which is in order to provide real-time treasury services, it's not enough to adjust your client-facing systems. So one of the key challenges that most organizations are facing when providing real-time treasury systems is basically how to adjust their core banking legacy applications, which are obviously years old and not ready to support real-time. And here, basically, you have two different approaches that you can follow, Jack. One, and probably the most immediate one, is you can start building your new client-facing functionality, the new APIs on top of your legacy core banking. But actually, this will be costly because on the one side, you will have to replicate this across many different legacy systems, across many different geographies. And also, I would say it will become inefficient. Why? Because you will not be able to provide a common client experience. That's what I would say it's a half job done to just re-engineer your client facing, but actually you forget that behind that you have a core bank infrastructure you have to adjust. So at Deutsche Bank, we decided last year to launch a multi-year program to modernize our accounts platform. That accounts platform is based in a new concept, which is what we call microservices approach, which is completely different from what we may say it's a big bank approach. What I mean with that is that these microservices can be plugged individually without the need to wait for the full rollout of the new platform. That way, you can accelerate significantly the rollout of your new platform, the providing of the real-time treasury services. And I'm going to give you a few examples in the next slide about what are those cases and how we can look into this. But clearly, that microservice approach is something that you need to consider when looking at re-engineer your accounts platform, which is what we are trying to follow here at Deutsche Bank.
And this is clearly the framework for the whole rollout. If we look at the next slide, which shows your approach in Australia, which is obviously going to be rolled out around the world, can you explain the framework in which corporates can expect this sort of thing?
Absolutely, Jack. So you can see at the bottom of the page, SDDA is the name of the platform. So we call it a Strategic Demand Deposit Accounts Platform. And that accounts platform, as we're going to see today, is at the heart of our core banking infrastructure. Australia is going to be the first country where we'll be piloting our new accounts platform. That platform will provide a full range of treasury services to our clients. Why Australia? Because you may know that we are starting our cash management operations in Australia from July this year. So we will basically go with a fresh core banking infrastructure and a fresh accounts data platform. So how is this accounts data platform going to help us in this journey that Moritz was explaining before? So first of all, I would like to get back to the concept of the microservices. So one of the important differences from this platform that we are rolling out in Australia is that all individual components will be externally exposable via APIs. That's an important concept because in the past, the way that we were looking at this core banking was a more monolithic approach where you have to roll out everything in a country before you can move to the next country. What we are doing here is, first of all, designing the microservices, making sure that they are available for directly usage. So for example, if we look at this 360B, what is 360B? 360B is the possibility that we can provide a global visibility, a global view of our accounts and balances to our clients, not just for Australia, but globally. Why? Because that microservice, that component is going to be rolled out and available globally, while some of the countries will still be run in the legacy platform. So that's one example that shows you how we can accelerate the global rollout of the platform without actually going into this big bang approach. Or for example, account statements, so critical aspect for most of the clients. So we are able to provide a rich account statements. I think Moritz was mentioned before, these new XML formats, CAN formats, ISO 20022 formats, in a common global standard way. Those statements will be digitally archived for up to 10 years with online retrieval of the statements. So again, that's another example of how we can harmonize globally without the need to deploy the full platform that we have in Australia.
These microservices that you're designing and implementing, they'll be available right across the world. It's not specific to Australia.
Correct. So in Australia, we are rolling out the full platform because we don't have any accounts platform at the moment. But these microservices I'm talking about are already actually globally available. So we have, for example, Moritz mentioned one example before, this push notification. So a treasury can get immediately an advice whenever they get a credit or a debit into their account via an API that's also linked to this microservice. That's a microservice that we can offer as part of the real-time account services, Jack. So I think that's a very powerful concept.
Anywhere in the world?
Absolutely. Absolutely. Okay. So that's why the concept is powerful compared to the previous approach in which you have to basically go country to country. Account management services, for example, with these new services, we will be able to easily open, reserve, manage accounts easily from these API services. We can provide all sorts of real-time account services. Moritz mentioned a few of them: account pre-validation, real-time balance approach, push notifications, but also visibility on limit services, interest conditions, so all sort of services. So that platform, and that's why I'm putting so much emphasis in the accounts platform, is going to be at the heart of our core banking infrastructure, Jack. That platform is going to be able to provide all these sort of real-time account services that were mentioned before. Is enabled for open banking, and I believe that Moritz will touch this topic in the next slide. Is globally available, as you have rightly mentioned, Jack. And most important, is leveraging on accounts data as a key asset towards our clients. So that's clearly a step forward, something that we have not obviously been able to offer until now. I'm really looking forward for this piloting in less than 2 weeks in Australia, but also to this global expansion on a phased approach through these microservices that we were talking about.
So when can the rest of the world expect this sort of thing to arrive at their country too?
Yeah, so what we are doing here, Jack, is basically rolling out microservices. So for example, all the real-time account services will be globally available. All the global visibility 360 view will be globally available. We will have also all type of account statements also globally available. The account management is something we will roll out country to country. So most of the services will be already available without the fundamental core ledger, which will be only available in Australia, starting with, and then we're moving to the next countries during 2021.
This is an exciting and big move. And open banking is a big move as well. And I think we should finish with why we can't ignore open banking. And Moritz, can you talk us through this? Because it's really important.
So we've seen quite a few of the benefits and quite some of the effort that the Deutsche Bank is doing to modernize our own system landscape to make this big move possible with the example that Jose has just outlined. So why can it not be ignored? In the beginning, in the introduction, I already mentioned the different external drivers, where I mentioned technology already, right? So the technology is really maturing and there's a lot of progress, not only in the financial services area, but APIs in real time is becoming the new reality. Digitalization, digitalized processes, this is what's going to be everywhere in the different business processes, be it B2B, B2C. It'll be established very, very quickly as we see it with our fast-moving or first-moving adopters in the bank on the client side. That's one part. Second one is the regulation has picked up in Europe with PSD2 and others to follow to drive open banking very strongly. And that's just Europe. In many other markets, in APAC, in the US, in South America, the regulation is starting to drive open banking and make fintechs ready to start entering the markets of the traditional banks. And this is where we, as the larger banks, really go in and make a virtue out of the necessity, right? We take APIs in the technology, open banking, and what's being called the threat from the fintechs and put something on top of this, added value for our customers in treasury and other areas that fintechs are not able to serve. So we are creating products here that are going beyond the regulations, but we are still driven by it, right? So regulations is an important topic that we have to look into, and it's progressing very aggressively across the different markets globally. Last, but maybe the most important one, is the changing customer needs that are really driving through the larger online merchants, the customer experience about immediate transactions taking place, like instant refunds or instant settlements of minor claims in the insurance company. Everything's becoming instant. And this is where the processes within the larger organizations, they become real-time end-to-end. And as treasury and liquidity and payments and services are part of those end-to-end processes, we need to understand that we will be all affected by this trend coming from the customer perception and the customer needs around instant execution of things. So what I really want to encourage you is to work with your treasury departments and your technology departments to create your use cases in your environment. Work with Deutsche Bank to support you in this journey to start this point. initiate discussions with your ERP and TMS providers on how to integrate seamlessly with your bank, preferably Deutsche Bank. Choose a starting point where to begin this journey, because it's not a one-stop shop, not one change at a time, but it's a journey to transform one process after the other one, and play around, right? Use our sandbox, go to our URL developer.db.com, where you see everything around what's available around APIs. And we are happy to support you in this very, very interesting and accelerating journey.
This is well said, because this is a fundamental trend towards more digitization, more removal of processes that really aren't necessary and so on. But on this day that the EBA clearing announced another start of a test phase for pan-European requests to pay infrastructure services, what would you say about what Deutsche Bank has done here? Because I think some of this is significant. Moritz, would you like to start us off?
Yes, Jack. Request to pay is a very good example of one of our higher value products that we offer, combining multiple API features in the market. So this is an example where we as a bank are on the front line of offering modern payment solutions, which do not only consist of one API like an instant payment, but it's a combination of them, right? And this is where the value for the traditional banks lie, that can combine those different features based on modern platforms and fast execution for a broad range and a large scope of customers.
Thank you. And Jose, what would be your key takeaway from this new trend to APIs, making real-time processing and liquidity management possible?
Making your client-facing channel ready is not enough. You have to basically go through the full value chain of the process, starting from your accounts platform. So real-time services are becoming the new norm, Jack. I think that we at Deutsche Bank have made a significant investment. We are building services, as we just mentioned, for Australia, but also globally for our clients. And I think it's a very compelling story that links from, starting with the basic services at the accounts to the more sophisticated new services like Request to Pay, which at the end of the day are a combination of different services that we can provide.
Thanks, guys. That was useful. Thank you very much.
Thank you, Jack. It was a pleasure.
Thank you, Jack.